going on YouTube? CJ here with the Trading Collective, an education-based community of traders. Coming at you with another video, short video. Today we're going to be talking about scaling, how to scale in and out of your trades. A lot of people aren't super familiar with this concept, especially if you're a new or beginner trader, but everybody should know what scaling is and how to do it, and a popular method of scaling. Really quickly, if you guys wouldn't mind smashing that like button for the YouTube algorithm, it helps us out a bunch. And if you're not already subscribed, please consider doing so if you enjoy the video and if you like the content that we put out. Without further ado, we're going to jump right into it. So this is security, Neuro, N-U-R-O, the ticker today. It was running up off of some information that Rob Trades was putting out there, considering the short float. And yeah, this thing was running up considerably in the early AMs and pre-market. Now our Selene algo called it way early, but if this isn't already on your watch list, you wouldn't have seen it, and you might have felt like you were maybe FOMOing if you were getting in on this candle here. So popular method of scaling, and one of the very basic ways is called the 25-25-50 rule. So 25%, 25%, 50%. That's how you kind of want to work your positions in and then also out. So first time that something like this were to pop up, on a candle like this, and you're wanting to go in, even though you feel like it may be FOMOing, if you're second guessing yourself, maybe don't enter the trade, especially if it's not your own due diligence. However, this applies across the board. First entry should be 25%. So 25%, you can go ahead and enter here. Let's say that, market open, you're seeing it move considerably. Again, wanting to see that double top break, you're buying at the double top, hoping to see it break out another position, possibly 25% there, or you're waiting to see if you get a dip to maybe help your average. Maybe you bought the top wick here and you're wanting to get a lower average. You get down here, 25% here on an engulfing green candle, and then you're getting confirmation with another engulfing green candle, getting over VWAP off of these two dojis. Good price action, good volume rolling through all down here. You're getting confirmations everywhere that this is a trade that you should be taking. So let's back it up here. So 25% entry on your first order, and then another 25% here on a dip. And then once the security is in full swing, for the way that you're wanting it to go, hence breaking this double top here, it almost did it here, it did it here, and it continued to do it. Then you would enter the third portion, or the remaining portion of your trade, scaling in. So you would enter your last 50%, and then at what point are you looking to take profit? Maybe you're waiting for the security to begin showing weakness. You start seeing weakness here with this 620 rejection, and then right here, this POC, this point of control line, you're seeing it getting hung up. Maybe you go ahead and scale out some profit. Now, when you're taking profit, a lot of people, I advise to do target 1, 2, and 3. Now there's different ways of doing, taking target 1, maybe you take 60%, or target 2, and target 2 you take 30%. And the last target 3, you're only leaving about 10% or so to hit your last targets. Or you could go in the same way you came out. You could go out 25%, 25%, 50%, or opposite of that. It's really up to you. The goal with any trade typically is to make your position free as quickly as you can. So that would mean as soon as you were to hit 100%, because this security from alert ran up over 194%. I mean, we're still sitting at almost 240% profit here. So right at 100% from your position entry, you're pulling profit. Let's say you take some here, 25%. You take some more here, add some more weakness, 25%, and then you're just holding for a 10 plus breakout, and then you're taking the last bit of your trade out. It's very important to remember to scale in and scale out of your trades. Now, what this would look like if we were to just break it down here with just $1,000, And this can apply across the board, and this is very simple math, I understand that. So 25%, your first 25% would be $250, and then your second would be another 25%, $250, and then 50% here would be your remaining $500. Now, what are you looking for when you're getting into your next set for scaling? I like to say set 1 is your first entry, set 2 is to help your average, set 3, whether that's averaging up or averaging down, set 3 is when you have confirmation of your trend, your analysis, and everything lining up, then you're going in. So $1,000 would be your position, and then would be set 1, set 2, and set 3. This is how I would recommend everybody just make a quick little notepad or maybe a spreadsheet or something of that degree. First entry, set 2 is average up / down, confirmation of your position of your analysis and it going the way that you want it to go. And then it's a matter of scaling out and how you want to do that with T1, T2, and T3. So T1, I like to say take typically about 60%. T2, take 30%. And T3 is your remaining 10%. That's the way that I like to preach about scaling. That's kind of a quick breakdown of what it looks like and things of that nature. If you guys enjoyed this video, please hit that like button, subscribe for more, and we'll see you in the next one. Take care, guys.